Good morning. Thanks for tuning into the trade setup. I'm Neeraj Shah, and the cues again fairly tepid, if you will, much like yesterday. Though yesterday we started off well and then drifted lower. Today the case is opposite. But let's start off with the key things that will impact markets today, right? So the US markets didn't have the best of days, about 1% lower, Dow down about 0.8%, 0.73%. And much as it seemed that things were on the mend, it certainly come off, right? So, which is why I would suggest that the market just seems very, very unpredictable in the current scheme of things. Some of the best minds have come in and said that we are on a bit of a bounce. That bounce has gotten sold into because of the 4 days of fall that even the Indian markets have had. The other cues, I think the most important variable for today is Brent crude, which is higher, 122.30. So oil is near 13-week highs, and that's the problem. So the CBOE VIX is down. Oil being higher doesn't impact US too much, but it does have an impact on India. The US 10-year yield, of course, is back northwards of 3. And remember, it was like that in yesterday's session too. So no big changes there. I think the big changes happened in Brent crude prices. Now, what's the news roundup? I think in slightly positive things, if you will, that Janet Yellen has said that the Biden team is looking to reconfigure China tariffs. And if that kind of resolves the firefight between China and US, maybe that helps sentiment. But oil, that's the big thing. Frankly, if you discount everything else, just oil jumping to 13-week highs on tighter US stockpiles. And UAE has said that oil prices are nowhere near peak as yet. Now, again, this may not mean much really, because we've heard enough instances in the past one way or the other, and the prices completely do the different thing. But yeah, be that as it may, it's important to highlight what UAE is, which is one of the key OPEC members, has to say. So this remains the big thing. I mean, there's a higher MSP for monsoon crops like rice and cotton, or the rupee continues to slide and now has hit a fresh low against the US dollar. Well, you could argue that that probably helps IT, which is why maybe IT was doing reasonably okay in yesterday's session too. But be that as it may, there is an issue that we have at hand. The SGX Nifty shows that issue, 0.5% lower in today's session too. Now we've comfortably stayed below that support zone of 16,400 to 500. People will look to next supports, but yeah, that's about it. Yesterday's session as well. So now remember, viewers, when we entered into yesterday's session, we had 3 or 4 days of adverse market breadth. Yesterday was yet another day. Media did okay, by the way. The Network 18, TV 18 boys did okay. Some of the real estate stocks, because of this upping of the loan that cooperative banks can give, went up in trade. Macrotech, a case in point, some of the others too. There were some downticks. Gujarat Gas, there was a UBS downgrade. That stock went down. Sugar really corrected simply because of the point that the output in sugar is going to be higher this time around, and therefore that should be positive. So if there was a belief that global sugar shortage would lead to higher prices and higher earnings, that kind of came under a bit of a cloud. But what's the trade setup therefore in light of all of that looking like? Well, I think the fact that the index closed near or at the end of the lower range for the 4th consecutive day of losses, it really damages any kind of uptrend hopes that people might have had. Think of it. There were only 2 pockets which exhibited strength, which is Nifty, IT, and media. And that's why the overall mood is very, very somber for the bulls. IT you can understand as well, right? I mean, at least that's one meaningful pack. But aside of that, media hardly has presence on the indices in terms of weightage. So frankly, it was only IT that kind of looked partly resilient, and you don't know for how long it will last, considering the doomsday scenario that so many people are painting. Though, the rupee depreciation should augur well, but let's wait and watch what happens thereof. And like I said before as well, the higher sugar output news will probably keep sugar stocks under check again today. So they were down. Very likely that they will remain slightly wobbly. These stocks have had a tendency of bouncing back though, so keep that in mind, but somehow believe this will be not a great day. Now, what are the stocks therefore to watch aside of sugar, aside of IT that we've already spoken about? Because of the rate action that was taken yesterday, I think financials remain center stage, and which is why the CLSA note on financials is important to highlight. They say that while deposit rates will rise as well, but if the external benchmark rates and MCLR go up by 50 basis points again with this repo hike, it would mean a material positive surprise for bank margins, simply because, viewers, the lending rates have been hiked or will be hiked sooner. The deposit rates will happen with a bit of a lag, and therefore the incremental impact or positive benefit for banks in the NIMS is extremely strong. I would suspect that by virtue of these hikes that have happened, April, May, June, the NIM numbers would probably look pretty decent, or even July, August, September for that matter, until the deposit rates finally catch up. But they say that they believe the rising rates are good for bank margins and the repo MCLR rates get reflected in 1 to 6 months, while the deposit takes 6 to 15 months to reprice here. I mean, I was just briefly saying it, CLSA put it out in numbers terms, right? So look at the gap that exists between the repo MCLR rate hikes versus the deposit rate hikes and what it does for margins and profits, therefore, in the near term for the banks. So that should be construed positively. They maintain the positive view on banks with undershooting credit costs, rising margins now, and reasonable credit growth momentum. So watch out for financials and banks in particular in the session today. Viewers, it's very interesting if you hear the talking point conversation with Gautam Duggar. I think it was yesterday, if I'm not wrong. If you hear that conversation, he's put it out in very good numbers as well, by the way, about how banking stocks or banks have actually had a CAGR growth which has been fairly impressive even in the last 3 years. But the re-rating hasn't happened, and therefore the market cap hasn't quite gone up in the same proportion. And therefore banks, both from a rising profitability perspective, history perspective, as well as valuation perspective, look okay. So CLSA is echoing the same sentiment, which is why I thought it's important to highlight that. Then the other factor is oil. I've been talking about oil all through this trade setup. Instead of talking too much, let's just see what analysts have to say for ONGC and Oil India, right? The two upstream names which matter aside of Reliance, of course. But analysts on ONGC, 82% of the analysts on the Bloomberg terminal, as analyzed by Bloomberg terminal, have a buy rating. The 12-month average target price is 212. The current price, viewers, is about 165, or if I'm not wrong. So there's a bit of a gap there, and most people have a buy rating on ONGC. And with oil shooting up, ONGC and Oil India could remain in favor today or focus today as well. Oil India had a corrective move yesterday, but even on that one, 80% of the analysts have a buy rating. The point is, viewers, in a matter of less than 2 weeks, the stock has moved from 210 to 20 or all the way to 280 already. So there's been a bit of a run that has happened there. And the average target price, as you saw on the plate, is also about 292. So it's not that there is a dramatic difference between 295. There's not a dramatic difference between the current price and the target price. Again, if you want to understand what they believe about FY23, there's a very good conversation that we've had with the Oil India CFO or Director of Finance. You might want to log in and hear what he has to say. Small piece of news on Vedanta and conflicting news flow out there, but just keeping in mind that the official news flow that we have is that the encumbrances created by the company on the pledge on the stake in Hindustan Zinc has been released. Some other stocks in focus include Deepak Nitrite, wherein they're saying that while they've been issued closure, and remember, this is it's bad news, right? Per se, the management came out on day one and said all is okay, and then they had to face this, which kind of shows how they didn't probably get the whole assessment correct. But be that as it may, I think in the video message that the chairman set out, they did say that there could be an issue or two. Now they're saying that the fire has damaged a part of the sodium nitrite facility, but all the other facilities are safe in the Nanseri fire, and they have made some applications, etc. The stock was down 5% yesterday, maybe rightly so. Let's see if there is some bit of a corrective move. Doubt today, but in the near term, if they get the plant back on track, if they do, big if. ILFS Transportation Unit has entered into a settlement pact with NHAI to get the and they will get about 736 crores on a handover of the Kate project. But essentially, it's a one-time settlement that they get straight to the bottom line. PNB, they're going to raise repo-linked lending rate to 7.4% already. Banks are starting to do that after RBI's move. And that is the point, right? The lending rates are moving up, the deposit rates maybe not so. Abbott India, I am not completely sure about what are the products that Abbott India anyway supplied to the government of Tamil Nadu, or if they did or no. But what Tamil Nadu has done is they've blacklisted Abbott, I think Abbott Global for 5 years. And so I'm not clear about this, viewers. You need to do your own check, but I just thought it was important to bring the news here. Maybe Abbott India also gets impacted. It's predominantly into nutrition products, but it also has a pharma leg to it. So it depends on what kind of products, I mean, how much does that contribute to the bottom line, and what kind of products did it supply to the Tamil Nadu government in the first place? Whether it happened through Abbott India or did it not, So all of that is a black box of sorts, but because this has happened, maybe there's a bit of an impact. So just thought I should bring it to your notice. And TVS Motors remains in focus, viewers. So Money Control is saying that TVS Motors has launched a 300 to 350 million fundraise process for its EV arm, wherein Citi has been tapped as an advisor. This should be construed positively to my mind. And TVS has lately got a bunch of positive news surrounding it. In fact, the UBS note captures it well, so just thought we'll bring it. They're saying there's a 4.5x jump in search interest for TVS iQ with the launch of the new variant. TVS Raider sales will probably surprise Street positively, according to them. They are saying that TVS is strong in all categories, ex-entry bikes, still a one-way race for Royal Enfield out there. And they are saying that TVS is the top pick in the two-wheeler space, followed by Eicher. They are neutral on Bajaj and Hero MotoCorp. On the target prices, on TVS, the target price is 100,000 rupees, Eicher 3,100, Bajaj Auto 4,000, Hero MotoCorp 2,500. So that's the view. TVS certainly seems to be a favorite of sorts. Lastly, MK came out with a note on Max Financial. They maintained a buy with a target price of 1,030. They say that the stock is well positioned. The company is well positioned for profitable growth despite temporary noises. They say, according to them, that there's a plan to simplify the corporate structure, which is on track. And promoter is working on plans to reduce the pledge on Max Financial shares as well. Overall, medium-term AP and VNB growth of about 20% remains an achievable target. Now, at some point of time, insurance firms will make money constructively. For now, I don't see a trend there. So that's probably some or most of the things that you need to know before trade today. Obviously, I would have missed a few, so excuse me for that. But thanks so much for tuning in. Keep in mind, cases increasing. The update that I have today is again for Maharashtra and Mumbai, but I'm guessing this is happening all over India. So I'm not trying to just bring it up for viewers who are in Maharashtra per se. But yeah, this is an example of what's happening currently. COVID infection counts are moving up higher. Mumbai has had the highest number of cases since Jan 26th as well. So viewers, if you're stepping out, please try and be safe. Like I said, it may not be life-threatening, but do you want to get quarantined for 7 days in a room? I guess not. Thanks so much for tuning in.